So now that you know a bit more about the tax control triangle, I have good news for you here, which is the new tax laws have raised our standard deduction, the amount of money you're allowed to write off before you have to pay any taxes. But the downside to this is many of us who support churches and charities no longer get an additional tax break. Well, I'm about to share with you a technique known as Qualified Charitable Distributions that'll help you get an additional tax break. Now that you know a bit about the tax control triangle, you can see that withdrawals from IRAs are taxable. There is a workaround on this though, a way that you can actually withdraw money from an IRA and not have to pay tax on it. It comes down to whether or not you're supporting a charity. If you have a church or charity that you like to support and you're age 70 and a half or older, you can actually send part, if not all, of your required minimum distribution directly to the church or charity. In doing so, you satisfy the requirement of making the withdrawal, but you do not have to pay tax on that portion of the withdrawal that went directly to the church or the charity. So what most folks do is they'll go to church on Sunday, and as the offering plate comes around, they'll have an envelope that they've put a check inside, and they put that envelope with the check inside in the offering plate. And at the end of the year, they get a letter from the church saying, here's the total offerings you made throughout the year. While that's a very nice thing to do, from a tax standpoint, it is not the best way to go about doing it. Now, what I'm about to share with you goes against the last 20, 30, 40, maybe even 50 years of what you've been doing, but it's worth changing your habits to get these extra tax breaks. How you do this is instead of giving money from your checkbook to the church or charity, you actually give money directly from the IRA. Now, your church or charity will not be disappointed by this, and they will not have to pay tax on this either. So not only will this distribution be tax-free to you, in that you satisfy your required minimum distribution but don't have to pay taxes on it, they'll then receive the money tax-free as well. So they're very happy to do this. Now, an important thing to keep in mind in doing this is when you fill out the forms with your IRA provider, you need to have the Employer Identification Number, EIN for short. It's like the Social Security number of the charity. Now, don't feel like you're being intrusive by asking the church or charity what their EIN is. A couple of years ago, I was meeting with a lady who was a Lutheran pastor, and we were teaching this technique to a group, and she was part of that group. And she started to laugh and smile, and she said, oh no, we don't get upset at all when somebody asks us what our EIN is, because that means we know we're getting some charitable contributions. So they're very happy to share that information with you. So once you've got that information, how much you want to give to the charity, what their employer identification number is, then you contact your IRA provider, and they help you fill out the forms so that now, instead of them getting a check in an envelope in the offering plate, they get a check in the mail, Monday or Tuesday from your IRA provider. So that is how you do the Qualified Charitable Distribution. So at this point, you might be wondering, well, that sounds good, Matt, but how do I report that on my tax return? And what's that look like? And how do I tell my tax preparer? Well, this is a copy of the 1040 tax return that most folks will use when filing their taxes. And line 4 is IRAs, pensions, and annuities, distributions. And it's got a 4A and a 4B. 4A is where you would write down your total distributions. So let's say your required minimum distribution was $12,000 for the year. You would write down $12,000 in 4A. But let's say you gave $6,000 of that $12,000 using the Qualified Charitable Distribution, where the money did this, it went directly from the IRA to the church. So what you would do is over here, you would write taxable portion of $6,000. The difference between those two is your Qualified Charitable Distribution. So in this way, you're satisfying the required minimum distribution over here, but you're not having to pay tax on it over here. The reason why accountants call this an above-the-line deduction is it's down here, further down below this line, where you actually would write normal deductions. But this is a workaround under the new tax code to be able to support your charities, satisfy your required minimum distributions, and get some extra tax benefits along the way. So if you'd like to learn more, there's a couple of things you could do. You could follow us on Facebook, you could subscribe to our YouTube channel, or better still, just pick up the phone and give us a call. We'd be happy to talk to you.